Hi, Assalamualaikum. My name is ALIAH MAISARA binti ADNAN. Today, my group will presenting about our company, which is Genting Plantation Berhad, and our competitors, Sarawak Plantation Berhad. Firstly, I will explain about our company background. Genting Plantation Berhad is a private limited company in 1977. It is listed in Bursa, Malaysia in 1988. The chairman of our company is Tan Sri Dr. Mohamad bin Haji Zainuddin. Our company is under plantation and agriculture industry, and we are conduct activities such as plantation, property development, and property investment. Next, I will explaining about Genting Plantation Berhad balance sheet for the year 2018 until 2019. The table shown that the company faced an increasing in the total assets from year 2018 to 2019. That's mean our company is always increasing their assets from year to year by purchasing an assets or making an investment. Genting Plantation Berhad also faced an increasing in total liabilities and equity. That's mean our company having a little bit problem in handling debt, but we are able to generate profit without need as much capital since our equity is increasing too. Okay. For the income statement of Genting Plantation Berhad from the year 2018 until 2019, the company shows an increasing in gross profit, but we are decreasing in profit from operation and profit before taxation. So, we are also faced decreasing in profit for the financial period too. That means our company is a little bit weak in convert revenue into profits. The earning per share of our company is also decreased by 3.88. These situations happen may because our company is facing declining in stock price of our company. Okay, just now I've just explaining about Genting Plantation Berhad's background and balance sheets of our company from the year 2018 until 2019, and the last one is our income statement from the year 2018 until 2019. So that's all from me. Thank you.
Okay, next I will present about financial ratio analysis for the trend analysis. The first one, liquidity ratio. For liquidity ratio, current ratio shows an increasing in the year 2019 compared to the 2018. So it means that the company has a more current asset compared to the current liability. The second one, quick ratio. The quick ratio also show an increasing in the year 2019. So it means that the company has more current asset excluding inventory compared to the current liability. It means that they can pay their short-term obligation. And the last one for the liquidity ratio is net working capital. The net working capital also shows an increasing in the year 2019. So that means that the company has a sufficient margin of safety. And then the second ratio is activity ratio. First one, inventory turnover. For inventory turnover, it shows an increasing for the year 2019 compared to the 2018. So that means the company has selling fast their inventories. The second one is average collection period. For average collection period, it shows an increasing amount for the year 2019, but it is a negative sign. It is because the company is not able to collect its credit sale in a short period of time. The third one is the total fixed asset turnover. It shows an increasing for the year 2019 compared to the 2018. So that means that the company has utilizing the fixed asset very well to generate sale. And the last one for the activity ratio is total asset turnover. The total asset turnover also shows a good increasing for the year 2019. So that means that the company is using the asset very well to generate sale. And then for the third ratio is leverage ratio. The first one under leverage ratio is debt ratio. For debt ratio, we can see that it is decreasing from the decreasing for the year 2019 compared to the 2018. So that's mean that the company have low financial risk. And then for the second one, debt to equity ratio, the debt to equity ratio also shows and decreasing for the year 2019. So that's mean that the capitals for the company is not from borrowing fund. And the last one for the leverage ratio is time interest earned. The time interest earned also showed a decreasing for the year 2019 compared to the 2018. But that means that the company has low ability to pay back the interest payment.
Assalamualaikum warahmatullahi taala wabarakatuh. To me Hafizah. My name is INTAN NORSYAFIRAH binti ABDULLAH from class RBA2422B. I will continue the presentation with my part, which is profitability ratio and market ratio. There are five types of ratio under profitability ratio, which is first, gross profit margin. So for the performance in 2019, Genting Plantation Berhad was performed badly in terms of core profit margin, where they only make 18.48% compared to the last year in 2018 with 21.46%. It showed that the company get a lower profit after deducting with the direct costs that the company generate from sale. Next, for the operating profit margin, the company their performance again was badly compared to the last year, where they only made 10.58% compared to last year with 40.41%. It indicates that the company make a lower profit after paying for variable cost of production. The result also could be too high operating expenses than last year. Third, net profit margin. The company also performed badly and the performance was decreasing. In 2019, they made 5.75% compared to 2018 with 7.72%. It indicates that the net income or profit of the company is again lower than last year. For return on asset, the company also performed badly and the graph also showed the decreasing, where in 2019 they made 1.54% compared to last year with 1.87%. It indicates that the company is inefficiency in using their asset to generate earning. Lastly, for the return on earning, the company performance also bad where they only made 2.58% compared to last year with 3.41%. It indicates that the company was inefficient in generating profit from its shareholders' investment in the company. Okay, lastly, for the market ratio, there is four type of ratio, which is first, earning per share. In 2019, Genting Plantation Berhad performance was decreasing in terms of EPS compared to last year in 2018. It indicates that the company has less earning or profit that can be offered to the investor for each shares that being invested. Where in 2019 they only made 50 cents compared to last year in 2018 with 18 cents. It showed a decreasing in the graph. Second, price earning ratio. For the year of 2019, the Genting Plantation Berhad made 70.53% compared to last year with 54.78%. It showed that the investors are willing to pay more money of current earning to get a share. Third, dividend payout ratio. The company of Genting Plantation Berhad performance was poor compared to 2018. It indicates that the company has lower percentage of profit for dividend payment and not be able to pay more dividend to shareholder than last year. So lastly, for book value per share, the company performance was increasing after they made only 5 ringgit and 30 cents last year. For this year, they made 5 ringgit and 92%. It showed that the company managed their value of equity better than last year after paying up all debts and their asset liquidated. That's all for me. Thank you.
Hi, I'm QAISARAH MIZAWAZUNAH binti MOHAMAD ZAKI. I will explain about financial ratio analysis between Genting Plantation Berhad and the competitor, which is Sarawak Plantation Berhad. For liquidity ratio, first is current ratio. Genting Plantation Berhad has a good current ratio compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has more current asset to pay for its current liability and still able to meet short-term obligation. Next is a quick ratio. Genting Plantation Berhad has a good quick ratio compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has more current asset without considering inventory, and prepaid expenses to pay for its current liability and able to meet short-term obligation. Last one is net working capital. The Genting Plantation Berhad has a good net working capital compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has sufficient margin of safety due to more amount current asset than current liability. Okay, next is activity ratio. The first one is average collection period. Genting Plantation Berhad has poor average collection period compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad is less efficient in collecting credit sales in short period. And next one is inventory turnover. Genting Plantation Berhad has poor inventory turnover compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad is less efficient in using its inventory to generate sales. The next one is fixed asset turnover. Genting Plantation Berhad has poor fixed asset turnover compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad is less efficient in generating high sales with small amount of investment on fixed asset. And the last one is total asset turnover. Genting Plantation Berhad has poor total asset turnover compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad is less efficient in managing all assets to generate sales. Okay, next is leverage ratio. The first one is debt ratio. Genting Plantation Berhad has poor debt ratio compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has more asset to finance by debt and have more financial risk. Next one is debt to equity ratio. Genting Plantation Berhad has poor debt to equity ratio compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has more amount of capital is from borrowing. And the last one is time interest earned. Genting Plantation Berhad has poor time interest earned compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has low ability to pay for its interest payment and do not have enough margin of safety. Thank you, that's all from me, and I will pass to the next presenter.
Assalamualaikum, Madam Hafizah. My name is NURUL, and now I'm going to explain on profitability ratios. For the gross profit margin, Genting Plantation Berhad has good gross profit margin compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad able to generate higher profit after deducting direct costs from its sales. Second, for the operating profit margin, Genting Plantation Berhad has good operating profit margin compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad able to generate higher profit after deducting direct costs and indirect costs. Next, for the net profit margin, Genting Plantation Berhad has poor net profit margin compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad unable to generate higher profit after deducting all costs. For the return on asset, Genting Plantation Berhad has poor return on asset compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad unable to generate higher profit from its investment in total assets. For the return on equity, Genting Plantation Berhad has poor return on equity compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad unable to pay more profit to its shareholder from their investment. Now I'm going to explain on market ratios. For the earning per share, Genting Plantation Berhad has good earning per share compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has more profits that can be offered to their shareholders for its shares invested. For the price earning ratios, Genting Plantation Berhad has good price earning ratio compared to Sarawak Plantation Berhad. This indicates that investors are willing to pay more money per ringgit Malaysia for current earnings. For the dividend payout ratio, Genting Plantation Berhad has poor dividend payout ratio compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has no percentage of profit for dividend payment and unable to pay more dividend to its shareholder. For the book value per share, Genting Plantation Berhad has good book value per share compared to Sarawak Plantation Berhad. This indicates that Genting Plantation Berhad has high book value per share outstanding.
Assalamualaikum warahmatullahi wabarakatuh. And my name a very good morning to Madam Hafizah. My name is ASNA MAZNI bin ABDULLAH from class RBA2422B. We present our conclusion and recommendation. Okay, as our conclusion, we can conclude that Genting Plantation Berhad performed well regarding the performance of company based on financial ratio analysis for year 2018 and year 2019, where the liquidity ratio and leverage ratio are good. However, for profitability ratio and market ratio are poor. Okay, regarding the performance of company based on financial ratio analysis, comparative analysis for year 2019, where we compare Genting Plantation Berhad between Sarawak Plantation Berhad, we can conclude that Genting Plantation Berhad perform poorer compared to its competitors, which is Sarawak Plantation Berhad, where Genting Plantation Berhad's liquidity ratio and market ratio are good, but activity ratio, leverage ratio and profitability ratio poorer compared to its competitors, which is Sarawak Plantation Berhad. Okay, for the recommendation for our company, which is Genting Plantation Berhad, first, they should maintain their performance in improving liquidity ratio, activity ratio and leverage ratio, where they are good in these three ratios in year 2019. And next, Genting Plantation Berhad should make good improvement more on profitability ratio and market ratio, where they are perform poorer compared to its competitors in year 2019. Okay, next, there are several strategies that Genting Plantation Berhad should follow, which are remove unprofitable services, find new customers, and review current pricing strategies. And next, reduce overall costs and reduce overheads. And next, finally, for our recommendation, regarding the comparison between the comparison financial ratio analysis between Genting Plantation Berhad and Sarawak Plantation Berhad, Genting Plantation Berhad should improve more on activity ratio and leverage ratio. Okay, for the recommendation for potential investors, we suggest that potential investor should not invest in Genting Plantation Berhad because of a company perform poorer and do not improve in profitability ratio and market ratio, where these two ratios are good for investors. Okay, in addition, Genting Plantation Berhad perform poorer compared to Sarawak Plantation Berhad in activity ratio, profitability ratio and leverage ratio. In year 2019, the company has less earnings or profit that can be offered to the investors for each shares that being invested, lower percentage of profit for dividend payment, and not be able to pay more dividend to shareholders. That's all from me. Thank you.